system. Nigerian removal from the grey list will yield tangible benefits for businesses and households alike, including lowering compliance costs, improving access to international finance, and making cross-border transactions faster and more affordable. In time, these gains will translate into smoother trade settlement, quicker remittance inflow, and even more predictable access to foreign exchange, enhancing livelihood, supporting enterprise growth, and deepening financial inclusion. The FATF decision reinforces the broader restoration of global confidence in Nigerian economy management. Recent international assessment underscores that this momentum, with Moody and Fitch upgrading Nigeria's rating on outlook on the back of stronger external balances, credible policy execution, and renewed monetary policy credibility. Similarly, the IMF 2025 Article 4 consultation highlighted improved reserve adequacy, greater transparency, and a reform agenda increasingly aligned with global standards. Commenting on the announcement, FATF's decision to remove Nigeria from the grey list is a strong affirmation of the reform trajectory and the growing integrity of the financial system. It reflects a clear policy direction and coordinated effort to key national institutions, financial stability, and strengthen Nigerian global credibility. Nigeria joins South Africa, Mozambique, and Burkina Faso as the latest African countries to achieve this milestone, reflecting broader progress across the continent. The CBN says it remains committed to strengthening collaboration with domestic international partners to sustain a sound, transparent, and trusted financial system that safeguards financial stability and market integrity while advancing inclusive and sustainable economic growth. The Federal Inland Revenue says it has achieved a record-breaking tax collection of 47.39 trillion naira between October 2023 and September 2025. The tax agency exceeded its revenue target by 15%, according to the performance figure obtained. The data shows that the service recorded sustained growth in both oil and non-oil revenue sources, reflecting the impact of ongoing tax reform and modernization initiative. The 47.39 trillion naira collection represents a sharp jump from 21.97 trillion naira recorded between October 2021 and September 2023, underscoring a 115% performance target against within the period. Non-import VAT exceeded its target by 137%, while import VAT hit 131%, signaling strong compliance among registered businesses via enhanced digital monitoring and stricter enforcement of tax remittance across the key sector. From January to September 2025 alone, the FIRS collected 22.59 trillion naira, equivalent to 120% of its revenue target and about 90% of annual target of 25.2 trillion naira. From this amount, oil tax receipts amounted to 5.29 trillion naira, reflecting 98% of the target for the period. Despite lingering challenges in the upstream oil sector, the figure signals improved compliance and recovery in petroleum profits and hydrocarbon taxes. In contrast, non-oil taxes surged to 17.3 trillion naira, surpassing projection by 128% and accounting for 76% of total revenue collected within the review period. Between January and September 2025, the service recorded a total collection of 22.59 trillion naira, representing 120% of the target for the period and 90% of the annual target. Of this amount, oil tax revenue stood at 5.29 trillion naira, achieving 98% of the target, while non-oil taxes contributed 17.3 trillion naira, representing 128% of the target, accounting for 76% of total collection. The revenue performance was driven largely by company income tax, non-oil, which contributed 32.6% of total receipts, followed by non-import VAT with 23.2% and petroleum profit tax, hydrocarbon tax with 17.4%. Other key contributors included company income tax upstream activities at 7.1%, import VAT at 7.03%, education tax at 6.1%, and gas income with 2.3%. Levies such as electronic money transfer, capital gains, and stamp duties made up smaller portion. The FIRS attributed the revenue surge to its sustained reform drive under the leadership of the current management team, including the deployment of digital platforms such as National Single Window, the National E-Invoicing System, and improved stakeholders integration. The agency also credited the enactment of the new tax reform law in 2025, which simplified compliance procedure, closed administrative loopholes, and aligned Nigeria's tax regime with global best practice. If the pace is sustained, projected revenue by December 2025 could reach or even exceed the FIRX internal target of 25.2 trillion naira, which is about 37.6% higher than the figure captured in the national budget. Such performance could provide the federal government with fiscal flexibility to fund infrastructure, reduce borrowing, and possibly clear arrears, though actual revenue utilization and cash flow remain subject to macroeconomic conditions and market volatility. But the FIRS chairman, Zach Adedeji, in a briefing stated that the government will continue to borrow despite its significant revenue inflow in the recent months. He argued that borrowing is not a sign of weakness, but part of the country's broader economic strategy. He described the move as an integral component of Nigeria's financial ecosystem and overall economic plans, stressing that the government approach is designed to balance revenue performance with long-term development objectives. The Security and Exchange Commission says over $50 billion worth of cryptocurrency transactions flowed through Nigeria between July 2023 and June 2024. The Director General of SEC, Dr. Emomotomi Agama, says in a notice that the situation raised concern over the low participation of citizens in the traditional capital markets. Agama says no fewer than 4% of the country's adult population were active investors. The Director General described the low participation rate as a major impediment to economic growth and capital formation. He noted that while fewer than 3 million citizens invested in the capital markets, more than 60 million engaged daily in gambling activities, spending an estimated $5.5 million every day. Agama also lamented that Nigeria's market capitalization to gross domestic product ratio stood at 30%, far below South Africa's 320%, Malaysia with 123%, and India with 92%. He says the disparity highlighted the urgent need to deepen financial inclusion and rebuild investors' confidence. The Director General called for reimagining SEC that serve as both regulator and enabler of private sector-driven growth. The Central Bank of Nigeria has released a total of $1.259 billion to oil sector players for importation of petroleum products and other related through from Dangote Refinery. According to fresh data from the Nigerian Midstream and Downstream Petroleum Regulatory Authority, petroleum marketers imported 69% of 21 billion liters of petroleum Nigerians consumed between August 2024 and the first 10 days of October 2025. Between January and March 2025, a total of 2.28 billion liters of petrol were imported, despite improved refined product output from the Dangote refinery. Fuel import is significant consumers of foreign exchange impact the country's foreign reserve and the naira to dollar rate. The volume also represents one of the lowest quarterly import figure in recent years, reflecting the gradual shift towards local refining and blending of petroleum products. A breakdown using the Central Bank of Nigeria quarterly statistical bulletin for the first quarter of 2025, the Apex Bank released a total of 1.26 billion naira for the importation transaction between January and March. A month-by-month breakdown shows $457.83 million was disbursed in January, representing 36.2% of the total. This dropped sharply to $283.54 million in February, accounting for 22.5%, before rebounding to $517.55 million in March, which made up the largest share at 41.3% of the total forex released for the quarter. While the NMDPRA data shows that the January import stood at 724.5 million liters, while 760 million liters and 803.7 million liters were brought in February and March, respectively. The struggle for market share between Dangote Petroleum Refinery and fuel importing marketer has intensified in recent months as both sides compete for dominance in Nigerian downstream sector. It could be recalled that while some marketers have insisted on importation, the Dangote refinery has been exporting petrol to other countries, including the United States. The 650,000 refinery has consistently boosted off its capacity to meet local fuel demand while exporting to foreign countries. However, pricing has remained the major determinant of marketers when choosing a supplier amid growing competition between refinery and fuel importers. Many operators in the downstream sector shift allegiance based on cost advantage rather than source. Confirming the development, the National Publicity Officer of the Independent Petroleum Marketers Association of Nigeria, Chinedu Ukadike, says marketers will naturally buy from any source offering the lowest price to stay in business. He added that the price gap between locally refined products and imports fluctuates depending on the global oil prices, exchange rates, and government policies. Meanwhile, the latest energy bulletin released by the Major Energies Marketers Association of Nigeria has shown a further reduction in the estimated import parity price of key petroleum products, reflecting sustained pressure from global oil price and exchange rate fluctuation. According to the report, the estimated import parity price of premium motor spirit has reduced to 805.6 naira per liter at the spot rate. All right, let's take a quick short break now. We'll be right back. Don't go away. Stay with us. Its business points where we extract the Nigerian economy and the government policies. The Naira recorded a mixed performance in the past weeks as it appreciated 1.12% at the official market and weakened 0.49% at the parallel market. At the official market, the Naira closed the week trading at $1,457.95 from $1,475 per dollar in the previous week, supported by limited intervention from the Central Bank of Nigeria and inflow from foreign portfolio investors. At the parallel market, the Naira weakened marginally by 0.49% to 1,491 Naira to a dollar, which analysts believe was the reflection of the persistent FX demand pressure and cautious investor sentiment, while Nigerian external reserve continued its steady rise as it stood at $42.87 billion on Wednesday, which is about $170 million appreciation from the previous Friday's figure. The improvement was supported by steady oil receipts, stronger non-oil inflow, and a sustained trade surplus, all of which continued to underpin the CBN's FX stability efforts. The analysts at the Cowry Asset Management Limited in their weekly report projected a positive outlook for the Naira in the coming weeks. However, steady oil receipts and gradual build-up in external reserve could offer some support to the local currency. The experts at AfriVest expressed similar sentiment about the outlook for the Naira in the coming weeks. In the long run, the Naira is expected to benefit from the decision of the Central Bank of Nigeria to revisit the issue of currency swap. At the just concluded IMF World Bank annual meeting in Washington, D.C., the CBN Governor Olayemi Cardoso explained that while the country had previously experimented the local currency trade agreement, the initiative did not yield the desired result. Before we call it a wrap, let's take a quick look at the Nigerian stock market. The Nigerian exchange recorded its strongest performance in the month as investors pushed the market higher by 4.48%, adding 4.32 trillion naira to its overall value in single week. The market capitalization closed at 98.793 trillion naira, while the all-share index settled at 155,645.05 points, reflecting renewed investors' confidence and increased activities across major sectors. Trading data from the exchange shows that a total of 3.695 billion naira shares worth 129.889 billion naira were exchanged in 148,077 deals during the week under review, compared with 2.422 billion naira shares valued at 76.618 billion naira traded in 126,591 deals the previous week. The strong turnover marked one of the most achieving trading week in recent months, driven largely by renewed interest in financial and energy stock. All right, this is where we'll call it a wrap on Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 276 on Star Times. To stay connected, kindly follow us on all our social media platforms.